The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 19th. Fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Think about that, folks. That's the way to live. Now, I hope everyone out there is having a great day. And if you're not, well, let's change that, because all we have to do is reframe and elevate. And the easiest way to do that, well, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance. And today, you and I, we're going to go look at the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I. I want you to know that I'm absolutely grateful for your presence here. But more importantly, I'm here to serve you. So feel free to pick up that phone. Now's not too soon. 877-927-6648. Of course, internationally or locally, any way that you want, you can always dial us at 727-445-1044. We'd love to hear from you, whether it's by phone, by email, steve@tfnn.com, and obviously pinging me inside the Tiger's Den, and I will get to every request that I possibly can. So let's go ahead and get this show started on fabulous and fantastic Friday. Of course, this is none other than the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading off 64 points. She's trading out at 18,533. S&P down about 8, trading at 2179. NASDAQ Composite off 14 at 5226. Russell 2000 down about 3 points, trading at 1233. Gold's back $10. Silver down 40 cents. Light sweet crude is flat, trading at 48.25. Leading the charge, the upside, it is John Deere, up $8 and change, nearly 11.5%. Foot Locker's up $6, about 11%. Toro, that's up about 4.5%, nearly $5. You've got GEO. That was the company that was taken to the cleaners yesterday. That's up about $3. You've got to the downside price line, $12. Amazon's off $6. Madison Square Garden's down about $6.50. Chipotle down $6. So plenty to look at out here. And of course, where do we want to begin? That's always the question of the afternoon. Where do we want to begin? What's the most important levels for us to be keen in on? And let's go take a look at those levels. The first level, I would say, that's going to be really key to the market, and we're going to focus today, right now, or this morning, or this afternoon. It's not even this morning, right? It, of course, depends where you're listening. Is going to be in the NQ. I'm watching the price level of 47.8550 to be exact. If we can see the NQ move below that area, well, first, that's going to suggest that price is going to go down and test the low from 2 days ago, August 17th, in that 47.72 level. Closing be below 47.85, though, suggests that things have started to move to the downside, and pretty good chance that what we're looking at is an A to B equals CD to the downside inside the NQ. This is a 30-minute chart that we're looking at, but when we draw the A to B equals CD levels out here, looks like the C point may have come in at about 10:30 this morning. Now, the one-to-one price projection on that gets you to about 47.53, 47.36 on the 1-to-1.272, but that's not going to happen unless we see price get below 47.8550. Of course, you might say, duh. Of course, how can you get to a lower price if you can't get to that one level? 47.8550, that is a key area to watch. Now we just flip over, take a look at the daily charts. Nothing has changed here with regard to the levels that we're looking at. And inside the NQ, that's going to be 47.7032. Now at 47.98, we're trading at 47.95. Remember, this is a market profile that formed a couple of trading sessions ago. Fairly narrow box out here. Of course, this box says that it really is sellers that are in control. How much control? They're in control, but they haven't exactly been able to influence. You don't see a chart Hey, Steve-O, Mr. Bill says he can't see charts in the den. How about anybody else out there? Because they're posted, but we'll make sure that they get reposted out there because we do want you to see the charts, for goodness sakes. Duffy says charts are okay. All right. So I'd have to say, Mr. Bill, maybe you got to go ahead and reboot or something. Not sure what to say. Thanks. Okay, so we got that all straightened out. Now, what we're taking a look at right here is really watching this. Now, I say that this box is in the hands of the sellers. That's because that point of control closer to resistance, which did act as resistance last night. Yesterday, today, and that price level is 48.1670. So 47.70.32. Then the romper room ought to start going to the downside if, in fact, it's going to happen. Now, everything points to the fact that Monday was a high out here, and we're going to start seeing prices continue to move lower. How much lower? I'm uncertain of at this stage. We're going to take things really one step at a time. Inside of the Dow futures are really the second contract that we want to be paying attention to, and the price level there is going to be 18,437. So those are the numbers to pay attention to. Why do I suggest to you that the markets are going to move lower? There just are too many divergences that when those divergences resolve themselves, they move in the direction that I'm now suggesting, which is to the downside. So for me, it's very clear. Now, whether the market's going to try to fog me up or not, I don't know. But at this stage here, I don't think so. If you take a look at the New York Stock Exchange, which has been strong like bull, except for really ever since about, believe it or not, since July 26th. So July 26th, today is August 19th. Pretty much since July 26th, this thing has been moving sideways, hasn't been overbought, and the price oscillator, advanced decline price oscillator is what I should say, can't get above that zero line. And now we've got all the other oscillators. When I say all the other two, right? Got the Dow and the NASDAQ composite also below the zero level. So what needs to happen, and where the next bottom likely forms, is when we get those oscillator readings down to a nice extreme oversold level. And we are a ways away from that. Now, the New York Stock Exchange, it might get there first, but I'll probably be watching the NASDAQ composite more closely when that occurs out here. So you've got the VIX index. It's probably its next leg up is going to go test the 1353 area. That's right now is the 50-day exponential moving average. And it's going to change over the course of the next couple of days. But, in a 1353, and, of course, what we want to know, and this will give us our second clue as to the extent of any move to the downside, is going to be if price is able to overtake that. Because if it does, then you've got 1474 that would be next, and then you've got 1831 that would be next up as far as the price levels where it would attain, and that'll go ahead and put some selling pressure inside of the markets out here. What caused the markets to bounce off of the initial move lower this morning? I know somebody's asking that question out there, and if not, well, I would be asking it. And since I would be asking it, I'll go answer it. If we go and stick with the NQ out here, whenever price moves lower or higher, does with less relative energy out here, you got to keep your eyes on it. And what you're waiting for is to see what's the next card that's dealt. That's the beauty of this game. You get to see the next card. The next card is going to really reveal something to you. Well, moving lower, big, huge, bullish engulfing candle, wide-ranging bar. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 60, S&P down 7. You know, another reason that we're really focused in on the NASDAQ composite, the NDX 100 as well. If you watch this on Tiger TV, you can see both of my charts here, the top portion being the composite, the bottom portion being the NDX 100. And when I refer to divergent patterns, this is not necessarily, well, this is the pattern where price moves higher, does with less relative energy. Never a good sign out here. It can vanish, you know, and find the energy. It can never form some type of reversal candle, and then okay. But in the case of both the NASDAQ composite and the Index 100, they both did form that reversal signal. In the case of the NASDAQ composite forming that seventh wave to the upside, inside the Index 100, it did not. It actually went on to wave number 8. So we're not really, I don't have that here highlighted on my screen. And prices below the oscillator and change lines as our price oscillator itself has turned down. So all good things on there for a market to pull back. And you want it to be pulled back. Quite frankly, you want to see this thing pull back as deep as you can. You'd like to see it get to a scary bottom out here. But I don't think that scary bottom, the real scary bottom, takes place until October or so. All right, so we have a few folks that have requests out here. Let's go and fulfill those requirements. Not that it's a requirement, but I do appreciate you sending me the emails asking. So the first is for Warren in Denver. And Warren wants to take a look at Royal Dutch Shell. RDS is the ticker symbol, and I believe he is looking at a long position. Warren, this is what I see when I take a look at this equity out here. I just see right now a consolidation phase out here. We see resistance. First, let me give you the market profiles. TAS market profiles say, hey, you're above the daily right now. Those are the blue lines on my chart. Let me go ahead and just blow this up here. So you got above that a couple of trading sessions. You go on August the 16th. You know, so that looks pretty good. But you're moving into these little gap down supply lines that have got 8 million, 10 million shares, you know, and you're up with light volume, vapor volume, as David White would like to call it, 3 and 4 million shares. So there's going to be a lot of chugging to try to, you know, it's like this bigger Royal Dutch Shell is curling right now, you know, and maybe all that it can curl is, you know, 25 pounds. It's like, hey, no problem, 25 pounds. But you put pound number 26 on there, what you wouldn't think 1 pound would make a big deal difference. And all of a sudden, you know, struggling to actually get that. And that's exactly what this is, Royal Dutch Shell is doing. It's struggling. Is there anything really bearish here? No, but it's just really struggling. I believe you're looking at this from a dividend play. Let me take off here's what else we know about the equity. Let me do this, take off the market profiles for you. We also know significant resistance up here at the high, which is, when I say the high, I'm referring back to October 19, 2015. So 56.37 is a pretty significant area. But right now, the bottom of that consolidation, if you're really looking to buy it, it probably comes in the 47-ish type area, 48 type area. You're at 50.60 right now. So, that's what I would. So what am I suggesting to you? I'd say your better buy is about $47, $47.50, something in that range out there. But I know that this is a longer term play for you. And so therefore, if I do put on a monthly chart, maybe that's a better view and a better picture for you. Here's where we're at on the monthly chart out here. Let's just take a look at retracements from its high out here. Maybe you'll be better off looking for a different equity. This thing is really not even above the 0.382 retracement from the high back in 2014 down to the low here in 2016. So maybe there's a better equity. So that was for Warren in Denver. Had a request from Larry in Detroit, and Larry wanted me to take a look at the U.S. dollar index. And he wanted to look at that on longer-term time frames, monthly time frames. He was seeing a head and shoulders pattern out there. Larry, I'm going to leave the head and shoulders patterns for you and others out there. Instead, let me just give you what I see. And let me do this here and switch over to where I probably put that. I think it's right here. Okay. So now what I'm going to do is I'm going to try to put the monthly chart first. Let's start with the monthly, since that's what you'd asked about. By the way, folks, this is the U.S. dollar index. We're looking at a monthly chart. We're going to be looking at the continuous contract out here. Now, what we can see, or what I see, let's first start off with what did the U.S. dollar index do? From the high out here in July of 2001. See prices moving higher, doing less relative energy, forms a bearish reversal signal, key reversal as well. And that was the month here again of July of 2001, right? So from that point forward, you got the bearish reversal signal, just like everything else that we take a look at out here, makes a move all the way down to the lows. Now, as it does that, this is why you and I pay attention to those. We sing in the key of G, the market does, and we look at those seventh wave moves. It forms a seventh wave move bottom with a nice little bullish engulfing candle a couple months later, but it does this back in April of 2008. That was the low. That's why we pay attention to those patterns. Now, for really a period of time, which I'm going to call, this consolidation really being in about 2003 through the break of the consolidation. That's the rectangular box through 2014. Long consolidation out there. So when I take a look at a long consolidation pattern like that and price breaks through it, to me, this says on a longer term basis, the monthly, which is what you were asking about, this says that where the U.S. dollar index is headed to is 105.58. Now, I know that you're looking at a pattern that you believe says the U.S. dollar index is going to crater to the downside, get smashed to the downside. In order for that to, for me to have that outlook, what I would need to see is I would need to see price get back into this consolidation level. That will not happen until, I'd say, approximately, I'd start looking at that occurring at about 89.71. You're at 94.54 right now. So if that happens, 89.71, then I say you are the winner, and your prognostication would be the correct one. Otherwise, all that we've really seen is one nice move to the upside really since about May of 2014. And now all we're seeing is just a bit of a retracement. That's all. Now you've got, it's trading right into this nice candle session from May of 2016. Nice little bullish engulfing candle out there. So support inside the U.S. dollar index on the long term is going to be 91.81. But really it's got to crack back through that consolidation pattern in order for the cratering scenario to play out. Now, that is what the monthly chart looks like. Let's go take a look at the weekly chart, because as we look at different time frames, we're going to see different things. Now, in the weekly chart, we can see a consolidation pattern up at these highs. This consolidation pattern running from about the 150 area down to somewhere around $93. So that is the level to be paying attention to, because the next break of this consolidation, I didn't draw it in here. We'll go ahead and do that right now. We'll put a rectangle out here. So if this is going to break to the downside, I would say this is going to be the measured move out here. And that measured move would take you down to about $85.48. Which would get you really close to testing the actual top of the monthly consolidation pattern that is out there. But that's what you would need to see in order for this to break. Otherwise, the U.S. dollar index is just moving up and down. It's not really doing a whole heck of a lot out here. And I don't have any signals that would suggest that it is going to do a lot. So that's what the weekly looks like. And let's go ahead and finish this off real quickly here. Let's take a look at the daily out here. And the daily shows where the next form of resistance is to the upside. That's that descending trend line, the blue diagonal line. That's where it found resistance after it formed a 1-to-1, A to B equals CD to the upside. Now we're seeing a retracement. So that's what the U.S. dollar index is doing. That was for Larry in Motown. This is Steve Rhodes with TFNN. Dow's off 64, S&P's down 7. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. NADEX, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, NADEX allows you to trade directly through them with direct market access when using their trading platform. NADEX never charges a fee to use their platform, which even includes real-time charts and full customization capability. NADEX's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. NADEX's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the NADEX banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. I don't see any requests in the den nor email requests out there. So let's go take a look at some individual stocks, see what they are doing. Let's go take a look at John Deere. DE is the ticker symbol. It's also the ticker symbol out there. Well, it looks like they were out with earnings out here. Let's get this off of the monthly chart. Let's switch it over to the daily. Oh, we do have a request from my favorite polar bear. And that, of course, is none other than David White. Now, we take a look at John Deere. This thing is just simply, consolidating like there is no other consolidation out here. You can see that on the trading session daily, we're looking at daily chart, 821. Thing gaps down with 15 million shares. So it's got a resistance zone in the $90 area at 85.43. Big volume in this equity today. But, and so what does that mean? It means it's going to go target the level of 86.42 to 88.20. If you can clear 88.20, look for resistance to be about $90.37 out there. Hey, let's go to our first caller. Let's go to Ed in Atlanta. Ed, thanks for calling. Thanks for holding. How are you doing this afternoon?
I'm doing very good. I'm looking for BGG. They came out with some bad earnings. Where do you think it's going to go?
BGG is the ticker symbol, which is Briggs & Stratton. So I would say that this is headed to, are you looking to buy this? Because I would say this is probably going to pull all the way back into the lows out here recently from January of 2016. Looks like, to me, it's a confirmed A to B equals CD to the downside, Ed, and that A to B equals CD price projection. Let's go take a look at it right now. That's going to take you to where it hit right now. So where it stopped yesterday was the 1-to-1 level. But when you gap down, you have a wide-ranging bar, which this is, with volume. It says you don't stop there. It says you go to the next level, and that next level being about 1723 is probably the area. Is this something that you're looking to get in on?
Yes.
Okay, so just out of curiosity, I'm going to put a monthly chart then for you. And so in the case of Briggs & Stratton, it has a clear resistance zone, just so you can know when you do get into it and you take a look at the reward, the risk reward on it, 24.26 or so is all you're really going to get, because that has been a resistance level ever since 2010, April of 2010. So, ideally, you want to find some type of entry point that at least gives you the best risk reward. Now, in January of 2016, on a monthly basis, it made a low with 14 million shares. Right now you're doing about 6.7 million shares. You're in there. So you're kind of on a monthly basis, maybe pulling back with light volume. So, again, and by the way, that price level is at about 1547 there. I'm going to switch it to the weekly, but it has really limited upside potential, which is what I just simply really wanted to share with you. I don't see this thing getting too crazy or anything along those lines. On a weekly basis, it's trading back into the swing point from January 18th, and that had volume of 4.9 million. You're at 4.4. So that says to me you're going to go test that low in that $15 area. So that's what I would do. I would hold off for about $15 or so.
Okay, next one. How low can Nugget go, NUGT?
NUGT. I think it can go it will go as low as it can until about the October timeframe. Hit me back in October after gold starts crashing lower. It'll go as low as it can until people say, "Hey, you know what? That gold trade was the wrong deal."
Yeah,
and that's when you want to be all over it.
October 26th.
October 26th. October October of this year.
Yes, because WD GAN has something going on there. If you go to time and price, something big is going on October 26th. So mark that on your calendar.
Well, I will tell you in October there's a big cycle. So that may be I don't know if that's what his work also takes us to, but I think that. So I don't know how low can it go. I'm really uncertain because it's had such a nice move. Look, just a normal pullback inside this equity is 117. A real normal pullback is $79. That would be ideal. $79.
That didn't go back to 911.
I don't know. I know they work in correlation directionally, but price movement dollar-wise. But right now, it's one thing at a time. Gold is it won't occur, and I don't believe it'll occur until we actually see the Japanese yen start to really move. So anyway, that's my take at this stage. All right, my friend?
Okay, thank you.
All righty. Thanks for calling. That was Ed in Atlanta. taking a look at Briggs & Stratton as well as GDX, and a little conversation there about gold. So our polar bear, our favorite polar bear, David White, he was asking about U.S. Steel. X is the ticker symbol. So X marks the spot is what we should do. And let's go see what this thing is doing out here. So what kind of patterns might be in play. So we can see that U.S. Steel is right now coming back into an area where this had broken out. There were 14 million shares on July the 20th. Today you've done 11 million shares. So it's going to trade back into that level. There is, it's trading below a swing point. We'll call it a juniorish type swing point from August the 12th on lighter volume. That was 21 million shares out here. Maybe this sets up, I would take a look at a trend line. So here's what I see. I visually see this little trend line out here. If the question is, where's U.S. Steel going? I would watch to see what U.S. Steel does when it hits the trend line. That price point area is probably around $19 and change out here. You're at 20.44. If you break through that trend line, channel line, I can draw it, a number of different ways. Here's what the channel line would probably look like here. Let me see. It probably looks something along those lines. So here's your channel line. I'll just go ahead and pull this back so you can see the channel along the top and along the bottom out there. So not too far away from the trend line. If U.S. Steel breaks through this, then it's officially broken its trend. And then the trend would not be your friend. So those would be the areas that I would be watching for inside of U.S. Steel. And by the way, if it breaks the trend, where's price going to head back to? It would head back. I would target just simply June 27th. Again, it's a daily chart we're looking at. Would be the next swing down into the 1480 level out there. That was for our man, our polar bear, Mr. David White. Okay, anything else? Hey, if you want me to look at something else, just go ahead and post it inside the den out there. Happy to do that. I'll just check my phone here real quick, see if any fans out there have sent in a email asking for me to look at. No, it is a quiet Friday afternoon. Everybody must be off. Hey, it's summertime. It's getting towards the end of summer, right? The middle of August. So hopefully you guys are out there. You're on the golf course. You're on the water. You're doing some surfing. You're on the beach. You're having, a beverage, a cold beverage out there. And you're listening to us here at TFNN. Now that would be a beautiful thing. Oh, Dano has got a request out there. Thank you, Dano. We're going to go take a look at the IBB. That is the biotech sector. For the NASDAQ, IBB. This thing here has really just kind of been trading sideways out here, so not giving us a whole lot as we take a look at this chart. But let's go see what we've got as far now. Where is price going to probably, what is it in essence doing? I tell you what, Dano, we're going to go to a hard break here, so I'm going to put some real thought into this to give you some great advice about the IBB, the biotech sector for the NASDAQ. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're taking a look at IVB for Dano inside the Tiger's Den. And I'm sure the clear pattern that jumped off of the page to each of you out there as you were taking a look at this blank stock chart. This is our palette, right? This is our palette in order to do our artistry. The first one that really just always sticks out at me when you see it is that sideways move, that little consolidation. Now, with regard to the consolidation, the top of it, you know, this is a little bit of artistry. You know, you look for what I look for is I look for the bearish reversal signals out here, you know, and when we can see the bearish reversal signals in this consolidation, then that becomes somewhat helpful for us to identify where we should put the top of the box. Now, the first bearish reversal candle that actually forms out here is on this trading day inside this consolidation box is right here on the trading day of April 19th. And that's referred to as a bear sash candle. So the high of the very next day, April 18th, which is at 286.35, really becomes in this case here, one potential for the top of the consolidation box. There is another bear sash that shows up right here. That is on June the 7th. That says the prior day becomes the resistance level, and that is 286.81. So you can see that is why I put my top of my consolidation box there versus up at the top of the swing points. I'm not saying one is right versus wrong, just simply in true Japanese candlestick charting, in trying to identify and defend levels of support and resistance. If you're playing the game of Stratego on this board right here, that's where you would draw the line. So what we know is that price is broken above the consolidation. Price came back and tested it, in essence, back here on the trading day of August 10th. And it is held thus far. So all that we can say to Dano at this stage is price is trading above a consolidation. It may be a real breakout. We don't, at this stage, that's all that you can call it, is a real breakout. Not until price comes back into the box can we say it was a false breakout. Now, if we go take a look at some profiles out here, our market profiles, that's the next thing we'll go ahead and decorate this with. And then we're going to see that price is trading below its daily bottom of its box out here. That's resistance, 291 and change, 291.65. So this would say, hey, price is going to go test the weekly point of control at 287.65 out here, which is also really the top of the consolidation area. So there's nothing volume-wise or anything that gives us any indication that it's going to go ahead and bust through that area. It's not that it can't. It's just there's not anything that suggests to us that it's going to. If it does break into the consolidation area, then 281.73 becomes your first target. That happens to be the bottom of that weekly weekly box, and then we resort down to taking a look at Fibonacci retracements. So now I just simply have to go ahead and get rid of some of the some of the decorations out there to make it more clear for you to take a look at, which is 276.88, the 0.382 retracement. There was also a gap up on the trading session of July 21st. I would suggest that would be an area to get hit. So that's what I see when I take a look at IBB. On my other charts, I'm not going to put them on the screen out here. There's no other reversal patterns. Well, I will say the one thing that you've got going for you, because you are short, is simply that the price oscillator has turned down. So you're looking at what looks like right around the 295 area, my Stevie's red line. As long as it trades below that, you may stay with the trade. But as you said, your premiums are getting eaten away on your put option inside of the IBB. So I hope that helps you out. Send some more requests, though, if you would like. So what we were taking a look at some individual stocks, what we were doing. We looked at John Deere. Let's go look at Foot Locker, and then we'll go take a look at a couple to the downside. Foot Locker is up $6 and change on earnings out here. Big volume behind the move today. Let's go see what ticker symbol, by the way, for Foot Locker is FL. So let's go see what it is doing. Clearly, this has broken its trend in a way that you like to see a trend broken. That trend line that I'm referring to goes back to the high here. Looks like September 25th. Here's your trend line. It was broken it looks like last week maybe, with a nice bar. Looks like a decent bar. Volume behind that move was about 2.3 million, but today 9.7. So the trend to the downside in Foot Locker is over. And now you've got an A to B equals CD, right? So we can use our measurement tool. We can go take a look at different price levels. Your A point down here on June 27th. Your B point out here at the top of that trend line, August the 1st. A retracement, well, come on, work for me. There we go. Your C point down here on August the 3rd. So you can see this thing has hit the 1 to 1.272 with a wide-ranging bar and volume. That says what to us? Exactly. That says you're going to go to the next level. Well, when this takes it to the next level, that price level, by the way, is 72.25. At 72.25, let's go see what we can find out there just by looking at retracements. It would be make it much easier if I grab the right tool, the retracement tool. And at that level, you're going to get to the 0.786 retracement level. So that may be the extent of where Foot Locker runs to out here. So a nice looking chart. If we take a look at wave counts on my other screen now, let's put this up here. You can see that what today marks is wave number 7. But because of that decline right here after wave number 5, it is possible that this thing really only is in the 4th wave count out here. But and I would have to say with the wide-ranging bar, markets do not end on wide-ranging bars. Can move sideways for a few days, give you a reversal signal later, but markets do not end on wide-ranging bars. I'm going with the call that Foot Locker is on its way to about the $71.68 level. Let's go take a look at Madison Square Garden. Yeah, let's go take a look at New York. Now, this thing here is moving lower. Their 4th quarter loss widened a bit. And let's go see what this thing is headed to. Now, this is the daily chart, so it's an IPO that hit rock bottom. Well, maybe the rocket bottom down here on February 9th, 2016. And thank you, Dana, for saying that explanation was good. So that's always good when I can communicate well. Now, in the case of Madison Square Gardens, an IPO actually that came out back here on the trading day of October 1st. And, nothing like going to Madison Square Garden, folks. You got to go catch a Rangers game there. Let's go Rangers. Even though I'm a Red Wings fan, you still got to go to the Garden and see a hockey game out here. Now, if we take a look at what Madison Square Garden did as it hit the rocket bottom on February 9th, made a nice little move up to the March 11 timeframe. Then it moves down, pulls back in April 29th. And what it did just a few days ago was it made the 1-to-1 A to B equals CD. By the way, MSG is the ticker symbol out there if you guys are trying to follow along at home. And today, what does this thing do? Today, well, it is actually just a doji candle. Now, doji candles mean what? I will tell you, doji candles only mean one thing at one spot, and that is at resistance. And resistance is really where, if we take a look, right, we do that same kind of thing that Dano and I did when we took a look at the IBB. We go to the left-hand side of the chart, and we start looking for what? We start looking for reversal candles. And in the case of Madison Square Gardens, shoot, it sticks out like a sore thumb out here, right back here in the trading day of October the 16th. That price point, by the way, was, 184.50. It got slightly above it, completed the one-to-one move. Now today is down below that level. So a resistance candle, the doji, I see a little doji in Stevie's window out here, is saying that this is probably it for a while. Now, trend line wise, if we just take a look at a trend line for Madison Square Garden, we'll try to figure out where price is going to pull back to. Well, you'd say probably to the bottom of that trend line, which it almost did here today. If it breaks that trend, then you're looking at price probably pulling back into this swing point area here from June the 28th. That's somewhere around 164 to about the 168 level out here. MSG. They're probably going to throw a party there tonight. I'm not sure who's playing, but Madison Square Garden. Let's go Rangers. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're in the home stretch here. We got the Dow's off 52, S&P is down 5. We're going to go to Littleton, Colorado, and speak with Woody. Woody, thanks for calling. Thanks for holding. How are you this afternoon?
I'm great. How are you, Steve?
I'm doing very well. Thanks so much for holding and calling. And you are interested in X-Ray, which is a dental supply company, I believe?
That's correct.
Tell us what you're doing, how I can help you.
Well, I'm considering going long. The stock's been in a nice trading range here from about $60 to 65. Got an upward channel in the current trading range, kind of down at the bottom of the range, and so I want to know what you think. The only thing I don't like about it is it broke a trend line on these lower lows, and so that's the question.
Okay, so you qualify as this week's winner for co-host. How do you like that?
Fantastic.
Yeah, you've done an excellent job here of analyzing ticker symbol XRAY. Now, the only thing is that on the trend line piece of it, if I go back to October 2nd, and I use that as the beginning of the trend line, you may have gone back further, but so this might be a shorter-term trend line. If I use that swing point low and then the trend line low or the swing point from February 12th, it still shows us as being in that little diagonal trend, and it really kind of came down there, yesterday and the day before. So I see that trend line as, from a diagonal standpoint, is still being intact, so that's good there. You absolutely hit the nail on the head with regard to the trading range, which really began, folks, on the trading session of February 25th, 2016. So early in February is when this equity went ahead and gapped to the upside. The volume behind the move was 3.2 million shares, which was somewhat impressive for this equity. I have no idea what took place on February 29th, where it had 19 million shares out there. It wasn't a wide-ranging bar or anything, so I'm never really sure, Woody, what to make of those. But what we do know is that initial breakout has been tested a couple of different times and is held. Volume-wise, it's been somewhat similar volume. For example, on March 24th, it was 3 million shares. On June 27th, though, it was about 2.2 million shares. So what does this say? I think you hit the nail on the head. It's in a trading range. Now, the top of that trading range is going to be this little shooting star candle out here, and that is the top of the June 13th level. And so you're looking at 65.83. And what you would do is, if you're going to take this to the long side, you want to see a volume of more than 2.7 million shares as it is approaching that area. Otherwise, it will probably get stuck inside the horizontal trading range, or maybe it'll maintain that little rising trend line, and any pullback will take it to the to wherever the bottom of that trend line is. But your analysis is really spot on. I can't. Like I said, you qualify as the co-host by calling sick.
All right. Well, just send me a check, and I'll be a happy guy.
I will send you 50% of what I get paid.
That's great, Steve. I love the show. Thank you.
You bet. Thanks so much for listening. Have a nice weekend. That was Woody, who did a really magnificent job in taking a look at ticker symbol XRAY, a dental supply company, just for the heck of it. Oh, but this thing really has been a nice little rocket ship. Look at this. If we take this thing back a lot further on a monthly basis, this has been a really nice move out here. How about that? Very good-looking chart. Now, what you don't like necessarily, Woody, is this month here. Let me see if I can change this. Give me a moment here. I want to put up a monthly chart. It's always good to do that, XRAY long-term, and see what else might be sneaking out here on a monthly chart. Yeah, I was afraid of this. Let me put this out here just to take a look. Doesn't mean that it's still not going to be a good trade. We're going off the air. Take a look here, Woody. Price on a monthly basis moving higher, less relative energy, and this right now is your key reversal candle, bearish candle out here. Just be careful. Didn't say don't take the trade, but long term. Hey, folks, stay tuned. Our man David White's going to be up next. Have a terrific weekend. I'll see you on magnificent, marvelous, magical Monday. Take care. Be safe out there.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.